Hi students, welcome to Akshara's Academy. We are seeing accounting for partnership firm fundamentals, and in this video we are going to see how a partnership firm is going to prepare the profit and loss appropriation account. Like a sole trader, the partnership firm will also prepare trading account, profit and loss account and balance sheet. But here one more account is prepared after preparing the profit and loss account, which is known as the profit and loss appropriation account. This profit and loss appropriation account is an extension to the profit and loss account. So let's see what are the items that are posted under this profit and loss appropriation account. First, the firm prepares the trading account, and all the items relevant to the trading account are posted under the debit side and credit side respectively. So the balancing figure may either be a gross profit or a gross loss. This gross profit or gross loss will be transferred to the profit and loss account. If it is a gross profit, it will be posted on the credit side of the profit and loss account, and if it is a gross loss, it will be shown on the debit side of the profit and loss account. Profit and loss account is a nominal account. The rule of a nominal account is debit all expenses and losses and credit all incomes and gains. So all indirect expenses will be debited to the profit and loss account, and all indirect incomes will be credited to the profit and loss account. Now this account is balanced, and the balancing figure may either be a net profit or it may be a net loss. The net profit or the net loss will be transferred to the profit and loss appropriation account. Again, this profit and loss appropriation account is a nominal account. So all expenses should be debited and income should be credited. This profit and loss appropriation account is prepared from the firm's point of view, not from the partner's point of view, but from the firm's point of view. Okay, so this profit and loss appropriation account, it follows the separate business entity concept which we have studied under the first video. So the net profit will be transferred to the credit side of the profit and loss appropriation account. So it will be shown as by profit and loss account for the net profit being transferred. If it is a net loss, it will be shown on the debit side as to profit and loss account. Okay, and it will be mentioned as the net loss. Next, interest on capital. Okay, the concept here is we are preparing this profit and loss appropriation account from the firm's point of view. So see, the partners, they are investing capital into the firm, and the firm in return, it is giving an interest for the capital that has been invested. So each partner, they will get an interest on the capital, on the capitals. Okay, so for the firm, it is an expense. It is paying out cash for the interest on capital. So it will be shown on the debit side to interest on capital, and each partner's capital account will be shown, A and B, and both the amounts will be added and shown on the outer column. Next is to salaries, commission and bonus. If the partners are receiving salary or commission or bonus, it will be debited to the profit and loss appropriation account. Again, here see A and B. Here for example, A and B, they are partners and they are doing some business activities for the firm. So the firm has to pay them salary or commission or bonus according to the deed. Okay, so when the firm is going to pay them, the cash is going to be reduced, and so it is an expense for the firm. So this is shown on the debit side of the profit and loss appropriation account. Next is to create a reserve. What is a reserve? In order to meet any future contingencies or unforeseen happenings, an amount out of the profit will be kept aside, and that is called a reserve. So this reserve will help in case of any unforeseen happenings or during any contingency. So that is again an expense for the firm, and it is debited to the profit and loss appropriation account. Next, to the credit side, by interest on drawings. See, the partners, they withdraw money for their personal use from the firm. So they have to pay an interest for the drawings to the firm. So for the firm, it is a cash inflow, and so it will be shown on the credit side, and each partner's interest on drawings will be shown. It will be the amounts will be added, and to the outer column we show the total interest on drawings. Now this profit and loss appropriation account is balanced, and the balancing figure may either be a profit or it may be a loss. If it is a profit, it will be shown on the debit side, and the profit will be transferred to the partner's capital account in the ratio of in the profit sharing ratio. And again, if it is a loss, it is shown on the credit side, and this loss will be again transferred to each partner in the profit sharing ratio. So this is how a profit and loss appropriation account is prepared by the firm, and here you need to remember the separate business entity concept in order to post the items correctly. Thank you, and in the next video we will see the capital accounts of the partners.